Joining us now to discuss that and a whole lot more, former Ford CEO, now senior advisor at TPG Capital, Mark Fields. Fields expanded Ford's electric vehicle offering during his tenure. Welcome back. Nice to see you.
Thank you. Always good to be here.
What do you think about this expanded relationship between Amazon and Rivian?
Well, it's interesting. They took the investment probably 6-7 months ago, so they must have done their due diligence. It's a bit of a risk because they say they're going to have this vehicle out literally in the next 12 months. And that's aggressive timing to bring a new vehicle out on an all-new platform, but they must have confidence.
For a delivery van as well, is that even bigger risk than if these were cars, given that they're electric vehicles? Are they going to use more battery power? Will they need stronger, more long-lasting batteries?
No, not necessarily. I mean, it's really a purpose-use vehicle, so you can be very focused on how you develop it, and it actually could be simpler. But still, that kind of time frame, 12 months, having a vehicle on a road, and then the numbers that they're talking about within the next 12 months, that's a pretty aggressive manufacturing ramp.
When you see a sizable deal like this, is it good for all EV manufacturers, a vote of confidence for that subsector of the industry, or is it bad for Tesla that they didn't get this deal?
Well, I think it's good for the whole industry because at the end of the game, in electrification is you got to bring the costs down for the batteries, and you do that through scale. So as long as they're purchasing batteries, for example, through common suppliers, the whole industry can benefit on economies of scale on that. And that's the key to getting the costs down and getting the price right for customers and getting good margins.
Wanted to get your take, obviously, on the UAW strike and what progress, if any, has been made between GM and where you think this goes.
Well, it's really interesting. I mean, from the automaker standpoint, they're facing a global market that's slowing down. They're facing their investments in electrified vehicles, which is an untested market, and also a market where the margins are lower. They're facing pressure on climate change, and they're dealing with the trade war, which is upending their supply chains. So you have that all going on, which means they have to be as cost competitive as they can going forward. On the other side, you have the UAW and their workers who want better wages. They want, at least at a minimum, to keep their gold-plated health care. They want lower use of temporary workers, and they want to eliminate the two-tier worker system, a wage system they have. Now, every 4 years, you always have unique circumstances. The one unique one that they've never had is a widening corruption investigation for the UAW. And that's really important because the OEMs, when you reach a tentative deal, the OEMs are relying on the union leadership to sell that to their rank and file. And so I don't think with that corruption probe, it doesn't weaken the UAW's negotiating power, but what it does do is weaken the loyalty and the trust that the rank and file have in the leadership. So this is going to be really interesting because, GM has taken a bit of a hardball approach. And, at a minimum, it doesn't build goodwill with the rank and file. And at worst, it angers them and makes them dig their heels in.
So do you think this is going to go on for quite a lot longer then?
Well, it could go on. I mean, GM took they broke protocol in which they talked about the proposal that they put on the table. And that's important. Maybe they were frustrated because of the strike or maybe because their message wasn't getting out. But the question is, where do you walk back from there? And that's, I think, a bit of the corner that they've painted themselves into. But the key is having a working relationship, or at least a collaborative working relationship as you're working through the negotiations. And that's been going in the wrong direction. So this could last.
Sounds like what you're saying, though, is GM should stand firm because they have the leverage this time with the corruption and with some of the economic factors at play.
Well, they should stand firm for the main reason is they need to be competitive with the non-union automakers. That's the bottom line. But they have to have that relationship with the UAW that says, at the end of the day, they have to understand what is the victory speech that the UAW can give their workers to sell this agreement, and that's going to be problemac at this point.
How can GM stay so strong, though? If it's going to go on for such a long time, they're clearly going to lose market share overall. So how can they afford to stay so strong?
Well, not necessarily. I mean, they have a lot of stock out there, a lot of inventory. They've built it up. So if it lasts a couple of weeks, it's not going to impact them. Beyond that, it's going to start making those inventories tight. But usually what you see for a lot of consumers who've made up their mind on what they want to buy, they'll just stay out of the market for a period of time while other manufacturers are selling. So you'll see some share shifts, but that may shift back.
What do you make of the clash between California and the EPA on emission standards, and the fact that some manufacturers have committed to higher standards regardless of whatever the government decides?
Well, this was really interesting because, what the automakers want most is certainty around the regulatory requirements. And so the deal that these 4 automakers struck with California, it was a compromise, right? They affirmed that California has its state right to set its fuel economy standards, but at the same time, the OEMs got certainty, and they also got a bit of a rollback on the Obama-era fuel economy requirements. But I think, this agreement was non-binding. It was voluntary. So these 4 OEMs actually are playing both ends, because at the end of the day, they've gotten their good graces for the state of California, and if the federal government is successful in bringing back the waiver, then they got lower fuel economy requirements. So, they're playing both ends.
And finally, got to ask you about Ford getting downgraded to junk for the first time in a few years. One of my panelists on Delivering Alpha this morning suggested it was some sort of indication of where we are in the cycle. What do you think about it?
Well, I think, first, Ford is a great company. They're in a cycle now where they have a lot of great products coming out over the next 18 months. And clearly they're going through their restructuring, which is going to cost some money. And, the rating agencies look at it through that lens for a certain period of time. But there's a great team at Ford, and they got a lot of great products coming.
You don't worry about credit stress?
Excuse me?
You don't worry about credit stress for this company?
No. You look at their balance sheet, and over the last number of years, and even during my tenure, we had built up a very strong and fortress balance sheet to keep paying dividends, but also keep the company in a very strong position.